Hey, welcome back to LR Options. In today's video, we will be looking at Apple stock and Amazon stock and doing stock chart analysis on both stocks. We will be using the 9, the 20, the 50, and the 200 moving average indicators, determining the trend of the stock. We will be looking at the stock's three different time frames and how different time frames dictate different opportunities for a trade. We will analyze uh, the stocks and covering several months in time frames. Okay, so let's look at, let's see, we're going to start with Apple, and the date doesn't really matter, but we're going to be using the red line here is the 200 moving average indicator. The black line is the 50 moving average indicator. The yellow one is the 20, and the blue one is the 9 moving average indicators. And all indicators is an average of all the days movement. For instance, the 200 indicator means that it takes an average of every movement done for the last 200 days. It averages them out and it gives you that smooth red line. And the blue indicator, which is a 9MA, is an average of the stock's movement in the last 9 days. And you get a more active line. As you can see, you get more movement. So you see more activity. So the more days that are average, the smoother the line. All right, so we're looking at Apple stock, and what I like to look at is also, I like to look at stocks at different time frames. And the time we're looking, this is the daily time frame. And so we're looking at the stock's activity daily. Okay, so from 9 to 4. Now, let's look at November 16. Well, let's go a little bit further. First, we see that the stock is going in an uptrend, and we're looking at November 10 here. And what happens is there was a downtrend. The stock moved down November 10th. It also moved down November 11th. Then November 12th, the stock moved up. November 15th, it was sort of neutral. And then November 16th, it moved up. Now, what I like to look at in an uptrend, I like to look at the stock first as it's moving down. I like to keep an eye on those candles. Then I like to see the first candle that turns green. This shows me that the stock is moving up. Okay. And it turned green November 15th. November 16th. Then on November 18th, it went up also. But you notice it went from green to green, and that's when I like to enter the trade. That's a good time to enter a trade because you're at a steady uptrend. Okay, it's a good chance it's going to continue up. So let's say that you were to enter at 152.02, the stock would have gone all the way up of that day to 155.01. Okay, and if you were going to do just a daily trade, you could have gotten out there. Or if you into swing trading, you prefer swing trading, you can remain in the trade until the next day, and the stock would have gone all the way up to 158. You would have made more of a profit, and you could have either stay there or continue. But I don't like staying in trades more than 2 or 3 days, especially if I enter a stock option trade of a 1 week expiration. If I enter a stock trade of a 2 week expiration or more, then I'll stay in the trade a little bit longer. But the problem with that is that the stock over here started to pull back November 22nd, stayed kind of neutral. It rested on November 23rd, 24th, pulled back November 29, then it started going back up November 29, November 30th. They would have to wait 1, 2, 3, 4, 5, almost 6 days for the stock to start to actually head in a positive direction again, in an uptrend direction. So that's why I don't like remaining in a trade more than 2 or 3 days. And if I do see a sign like over here, November 22nd, it's going to start pulling back down towards the moving indicator line, then I prefer getting out of the stock. Take whatever profit I took, or not, whatever losses I got, and just get out there. Now if I had a longer, like a monthly expiration date, okay, then there's no problem staying in longer. But like I said, I don't like staying in trades that long. I also like to look in the changes of the candles, because that's another indicator. The change in color, that's another indicator that your trend is going to head in the direction that you prefer, that you're trading in. So let's say that the candle. Okay guys, I'm sorry about that. I had to pause the video there for a few minutes. I had a whole bunch of stuff hanging on a hanger over here in my closet. Everything, boom, just fell, scared the bejesus out of me. Sorry about that. Let's continue. So I believe I was talking about, before I pause, I was talking about I also like to follow color changes in candlesticks. And what I like to look at is if a trend is going up, you see a red candle, and if the next candle is green, I like to wait until that green candle passes the previous red. So let's go to, we got November 26th, it's a red candle. November 29, it's green, but it's sort of neutral. It's like in a resting period. And then you've got November 30th. It really has passed the red candle here. This is a good entry right here. Good time to enter this trade at 160.76. The trade that day goes all the way up to 165.43. You can exit here if you're going to do a daily a trade for the day, or you could continue into the next day, and the next day would be the December the 1st. Okay, and it went all the way up to, it started at 169.74. It started coming down, but just the fact that it started all the way up here, you've still got a profit. Just because it's a red candle doesn't mean you didn't get a profit. You've got a profit because it started further up, higher up than it ended on the previous trading day, which was the 30th. So you can either exit as soon as the trade begins for the day, or you could wait a little bit and exit, then you still got a nice profit there. Again, December 2nd, you've got a green candle, you've got a red one. I like to wait for whatever comes after the red, if the trend is going up, because that to me is almost a sure sign. It's a very good indicator the trend is going to continue up. You've got a green candle, you can enter here because it's already past the red candle. And 164.95, you hold it on to the next day. 170.70, you've got a nice profit. You can even hold it on for another day, depending on how long you've entered this trade for. 1 week expiration, 2 week expiration, a month. Again, I don't like holding on to the trade for more than 2 or 3 days. Okay, so I probably would have gotten off here or here, second or third day. And depending, you can only, if in certain situations you can only do 3 day trades in a week. You know, if you've got less than a certain amount of money in your brokerage account, for instance, I think it's 26,000. You've got less than that amount of money. You can only do 3 day trades in a week, or else if you go over there, you get penalized. They freeze your account. Blah blah blah. So that's why I don't like to do day trading unless I see, you know, I'm like, I've got such a good profit and I'm afraid of holding on to it to the next day. I don't know where the market is going to open. Nobody knows when the market is going to open the next day. So that's when it's, you know, nice and it's good to take your profits on the same day. Again, you've got a green candle over here. You've got a small red candle, and it's like in a pausing stage when it's small like that. And that usually means it's going to continue. The trend is going to continue in the same direction. And it did. The next day, opened up green. Okay. Continued up. Hold it off for one more day. It would have been still fine. And you could have gotten off the next day. Gotten out of that trade. Closed the trade. All right. Okay, so this is the daily time frame that we were talking about. We can also change the time frame that we're working on. And when you change your time frames to a smaller or lower time frame, let's say you go from a daily to an hour or 30-minute time frame, you'll see that you have more trading opportunities, more trading windows to jump into and out of than you do when you have the daily ones, the weekly ones, or even the monthly ones. So let's look quickly at let's go to Amazon. Let's use Amazon stock, and we're gonna change to the we'll change to the hourly time frame. Okay, and as you can see here, you've got more trading opportunities to get into and out of. And this is, of course, going on a down trend. Okay. Stock is going down. Especially when the stock dips under the 200, you're going down. Downtrend. And let's say over here you've got the red candle. Remember, I like to look at green candles. Or if you've got a red following another red, that's a very powerful signal too. And these are large red candles. You can enter there too. Okay. And that would have been a nice profit that day for that day. This is December 10th. We've got a green candle over here. Next candle opening up for the beginning of the next day. It's red. You can enter there. Get out at the end of the day. You've got a profit. Okay, over here you've got green candles, December 14th, going up. December 15th, you start with a red candle. I would have gotten in there, and I would have waited till that red candle past the previous green, which it did, and gotten out somewhere around here or here, and would have made a nice profit too. Okay, or wait till the candle turns green. That's a signal, get out. You know, get out of that trade, close that trade. So you see that how there's much more opportunities to get into in a smaller time frame. You see more detail, more opportunities, more activity. Okay, so if you would like to see more videos of this, just like this, please hit the subscribe button, the notification bell, so that you receive notice of when I post a new video. Feel free to share, comment. If you see something that you need maybe more detailed explanation of, or you want me to go further into, or anything else, please feel free to comment. To summarize, moving averages show the stock's average daily moves at different times, such as 9 days, 20 days, 50 days, 200 days. Moving averages also help you determine the trend of a stock, as we just saw. And time frames will show you either more or less detail of a stock's activity. Smaller time frames show more activity, detail, and therefore more trading opportunities that you can take. Okay, so I'm going to end here. Again, please let everyone know what we're doing here at LR Options. We'll see you next time. Bye-bye.